wise the Floki's fractal signal was on First Republic. My the downside of my range looks like it's going to get printed on the take under here.
Yeah, I mean, this is just, look, I mean, I think this has been sort of percolating, obviously, since the earnings call showed, just catastrophic deposit flight, which I think most people already sort of assumed. But, this is what we had talked about kind of early on in this whole dynamic, which was, the problem, the inherent problem is, right, the conflict of interest. So in other words, why does JP Morgan or really any other bank for that matter want to, bail out effectively First Republic, basically take them over when they can, get them out of receivership with, loss sharing and, sweetheart financing as the alternative, right? So it creates obviously a very powerful disincentive for any kind of pre-receivership bailout, and that's what we saw again, and has been sort of the common refrain here, at least thus far. All roads continue to lead back to JP Morgan. So yeah, that's that.
All roads, we used to say this in New Haven, all roads lead to Toads. Toads being the famous bar on Yale's campus. But isn't it something? I mean, is so on that, do you think that there's like outrage, or it's just what it is at this point, or both?
Yeah, I think at this point it's I think outrage is probably it's been festering for long enough that I think it just sort of is the final chapter here in this sort of episode. May or may not be. We'll see. We may get some more action here, but but I think the bottom line is, the BTFP program went a long way toward, containing what was otherwise going to be just this unbelievable explosion and failures with, at basically warp speed. So, yeah. But again, the transition, as we've talked about repeatedly and continue to obviously expect, is this sort of shifting over from, this acute liquidity phase of the cycle to the credit phase of the cycle. And, the credit phase of the cycle is more of a slower burn, right? It doesn't, that's the thing about liquidity is acute, whereas, credit is chronic, and it goes slowly, but it feeds on itself. And that's exactly what we see, quarter in and quarter out with these lending survey dynamics. So, just continuing to ratchet up the pressure. Obviously, expectations are that we'll get another quarter point on Wednesday. That'll, further add to the stressors in the system. And one thing I would remind is that even if, this ends up being the last quarter point, may or may not, we'll see. But even if that's the case, there's been no indication that the Fed's going to slow down with respect to quantitative tightening, right? So if they're still running off in the background, that is effectively still tightening, unambiguously. So they'll still be tightening, even though the Fed funds rate may or may not have technically paused. So keep that in mind.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.